traders, Kazavini coming to you from theclosingprint.com, December 20th, 2020. In this holiday shortened version of your weekend video newsletter, we'll discuss the indices, all of which moved higher last week, with the exception of the Hang Seng, which was flat. The leaders all moved higher, with the exception of Google, which is having some issues with its trade practices, and Intel was off last week as Microsoft announced that it's going to start using its own chips in its servers and computing devices. Most of our indicators going into the wake are bullish. Our heat maps are improving for the S&P 500 sectors and international markets. Bottom line, we have 12 bullish, 7 neutral, and 1 bearish indicator to start the week. So we're short-term neutral to bullish, intermediate-term bullish, and long-term bullish as well. We have S&P 500 resistance ratcheting up to 3750, and support has moved up to 3650 as we start this holiday shortened week. Spiders continue to produce white bricks on this Renko chart, which removes the noise from the market price action, which we can see here with a much larger range from the January-February peak to the trough in March. We made this range breakout most recently, July-August, did this little double dip or W pattern that we see on the daily time frame. Momentum is shifting higher and bullish with this W pattern on the daily, which we talked about over the last couple of months. Continue to rise above the 9 EMA, the close on Friday, back above the 9 EMA. Shy of the 21-day, RSI remains above 50. Volume was above average, showing what could be construed as a distribution day on Friday, while MACD continues to drift lower, showing some divergence. We also see stochastics turning a bit lower. So short term, we could still see a test of the 21-day. That would be completely normal. That's only a 2% drawdown after a near 16% gain since the October low, while at the same time the 2,500 stocks on the NASDAQ composite, which broke out in late November on above average volume as accumulation, as depicted by the accumulation distribution indicator, breaks out to new highs, indicating institutions are falling all over themselves, buying stocks by the fistful. In addition, if we overlay the performance or outperformance of the Russell 2000 IWM small caps, murdering the bears, 110% gain since the March low. While severely extended from its moving averages, the good news around COVID-19 vaccines and strong economic data continue to propel small caps higher in this group of cyclicals, which are poised for a strong 2021, and the acceleration in GDP, which is forecasted at 4% currently, with a backdrop of increasing M&A activity pointing to a year of outperformance as the small and mid-sized companies continue to beat big caps and growth stocks alike. We'll look for IWM to continue its outperformance. That said, with most of our indicators bullish and only one bearish, we do see the chance we could pull back to the 9 and 21 day. This S&P 500 equal weight index, we're a bit overbought. The number of stocks above their 200-day moving average at 91%, which could be viewed as overbought in the short term, and exhaustion could lead to a small pullback in the next week or two. Suffice to say, now that OPEX is behind us, we can once again look for the unpinning in the S&P price action to refresh before we can provide a new forecast as we shift towards year-end. It's likely that 3,700 now is the key support level, with an upside target of 3750 on the S&P 500. This is the Bank of America U.S. High Yield Index Option Adjusted Yield Spread. That's a lot to say in one sentence, but it basically tells you what the risk is of an economic downturn due to macroeconomic conditions. And since the bond market is basically twice the size of the U.S. equity market at trading almost $40 trillion compared to less than 20 trillion for the domestic stock market, trading volume in bonds is also dramatically higher than what we see in the stock market volume, with nearly 700 billion in bonds traded on a daily basis. What this is basically telling you, if macroeconomic conditions are improving as the yield spread drops, it's telling you that macroeconomic conditions are getting better. If we zoom out a bit and go out a few years, we can see 2016, that was the Asia commodity crisis, and previous peaks like we saw back here in 2011, 2012, that was the threat of a Greece default, and the 2008-2009 bear market that we saw in global equities. Bond traders were very nervous and yield spreads exploded as a consequence. The inverse of that chart, of course, can be seen in the 10-year yield with the European debt crisis with Greece. We also saw that with the Asia commodity crisis at the end of 2015 into 2016. The 10-year yield started to rally. And once again, we're starting to see that performance reflected in the 10-year yield at present, just shy of 1%. With returns in the markets, when these yields turned higher, in the S&P 500 in the lower panel, reflected accordingly. So this breakout is being fueled by improving macroeconomic conditions reflected in the bond market that is 2 times the size of the equity market. This, of course, can be seen in the junk bond market and high yield corporate debt. As these charts continue higher, that's bullish for equities. And again, as yields move higher, bonds move lower. Here we have the TLT continues its bearish trend on the weekly time frame, with RSI below 50 and fading. With the backdrop of the US dollar continuing on a bearish trend, helping small caps and the cyclicals as well as international markets, together with macroeconomic commodities like copper, which move higher. We got better than expected numbers out of the builders and construction market last week, forecasting better things to come. As we can see in the monthly time frame, we broke out of a 9-year downtrend, continue to rise, which is also reflected in the crude oil market, breaking higher above this resistance level at around $42, $43 per barrel for the last 4 weeks, have been trending higher. Volume is increasing. Bullish correlation to the equity market, which is also finally having an effect on the gold market. So gold broke back above its 50-day moving average. Keep an eye on gold stocks as we head into the new year. Sectors and industry groups in the U.S. are also improving, as we can see, with biotechs improving the most last week. We also saw international markets with nice gains. We'll reflect on those this week as many of these countries continue on bullish trends thanks to a lower U.S. dollar. Biotechs are higher, trading near 52-week highs. Transports are near support at the 21-day. As previously discussed, with improving macroeconomic conditions, we're seeing the materials sector move higher. Prices in gold, silver, steel, production, and copper all forecasting better things to come in 2021. Communication services, Spider also moving higher. As we can see in this relative rotation graph, with Google and others outperforming, Comcast, Disney, T-Mobile, ATVI breaking higher last week, even though it's showing a red bar. ATVI has room for improvement. Energy has been fading back to the 21-day, looking for a buy point. Financials are flat. Industrials are finding buyers, noted by the wicks above the 21-day and 9 EMA, looking for a break higher. In stocks like Boeing, off their 21-day moving average, 3M, Caterpillar, John Deere, all looking good for this week. Technology stocks, in particular software, improving, breaking out of a consolidation or symmetrical triangle, with PPO moving higher, volume increasing, showing a potential for a follow-through. And the software stocks like Microsoft, with news out last week that they're going to start producing their own chips in their servers and electronic devices. Consumer staples, often looked at as a defensive sector, is moving higher. The more sectors and more stocks that are participating, the better, in my humble opinion. Consumer staples looking like a breakout. XLU underperforming. XLV, including pharmaceuticals, medical device makers, biotechs, all moving higher. And consumer discretionary into the holidays. Consumer discretionary includes e-commerce. Many of these stocks like iBuy, these ETFs, Amazon, eBiz, some of the larger names in these groups would be Stitch Fix, Etsy, etc. Shopify, Amazon, looking for a follow-through as they outperform the S&P 500 into year-end and 2021. In addition to retail, which should outperform year-end into the first quarter. And finally, the XLY-XLP ratio as macroeconomic conditions improve, that we saw in the bonds, credit spreads. We also see it in this chart. Looks nothing like February of this year, where institutions were quickly positioning more defensively, and late 2018, where we had a 2-month, 3-month warning before the markets rolled over and the Fed got to tightening too soon. Right now, it looks nothing like these two periods in the past. So it looks like institutions are positioned for a bullish follow-through into 2021. IBD 50 stocks looking good going into this week. ATVI following through. If you bought this on the pullback to 83, the day that Doc or Pete Najarian, I forget which, mentioned it, we waited for it to pull back. It did, bounced at VWAP, and since then has followed through. Volume increasing. We have RSI muscle. I'd like to see a little flag now for another trade on this. If you're still in it, you're fine. Looking for a little pullback to add. 9 and 21 and 50-day moving averages are all bullish. This is in the communications sector. Adobe, as previously mentioned, software industry group is breaking out. Looking good. Draw a trend line through here, triangle breakout. Looking for a follow through. Volume increasing. RSI has room to run. And we have MACD and stochastics both bullish. AMD looking for a follow through this week on the news that Microsoft is going to start using its own chips for its servers and computing devices in lieu of Intel, which took a hit because of that news. AMD looking for that to follow through. Amazon looking for a bounce as e-commerce stocks into year-end and the first quarter. Looking for a follow through here as well. Healthcare, pharmaceuticals, biotechs all looking good last week. Looking for Bristol Myers Squibb to follow through. We also saw some really nice bullish action on Johnson & Johnson last week. J&J, also noted in the opening monologue under the Dow 30. AVGO, Broadcom, bullish breakout. I'm focusing on this only because I'd like to see more semiconductor stocks breaking higher. I don't want to chase AVGO up here. I'd rather see a little pullback if anything, a day trade if it does follow through on Monday, as it does remain a bit extended. Builders First Source, this has been on the watch list off and on for the last few weeks, breaking out last week to 52-week highs on better than expected new home sales last week. CDNS, another chip-related name, design software for semiconductors, following through on above average volume. CR&C from previous watch lists, looking for a little flag for potential entry. Chegg, a lockdown stock, also looking for this triple top to resolve for any kind of breakout into the first quarter. Crocs still trending each time it pulls back to the 9 or the 21 day. Buyers step up. RSI is still above 50. Keep an eye on it going into year end. DR Horton back above the 9, 21, and 50 day moving averages. Looking for this home builder to move back up to these pivot highs. RSI is rising. Digital Turbine from previous watch lists finally broke out last week. Volume following through. Institutions are the buyers. MACD's above signal line. RSI showing muscle. And stochastics at highs. Looking for a little flag now that holds near the 9 and 21 day for potential new entry or place to add, or for any potential options trades. Dynatrace following through has got resistance right at this level. Depends on what happens there. I'm looking for a flag and then a potential follow through. EBS from previous conversations during the live sessions. Trend break, looking for a follow through. RSI rising, volume increasing, MACD above its signal line. Looking for a flag for positioning purposes right at this volume by price band. Looks like we could continue higher as EBS builds the right side of this pattern. Etsy, as previously mentioned, this reversal, inverted head and shoulders, looking for a follow through here. Cup and handle, these stocks in the e-commerce group and retail outperforming. Flagstar Bancorp mentioned last week, nice little follow through. Floor and Decor riding the trend of improving economic conditions, especially in the construction related names. Fortinet continuing higher, along with the internet security related names last week, which all bolted higher. FireEye, Palo Alto Networks, CyberArk. Many of these stocks will most likely follow through. So we'll be looking for day trades, a little bit extended now. Futu at the 9 and 21 day. This is a China-based company, operates as a brokerage platform. LRCX, another one of those chip stocks that's set up now. It's at the 21 day. Watch for a bounce on Monday, Tuesday. Logitech follow through from previous watch lists, looking good. Marvell, if you're still with this one from earlier in the week, we saw this one as a follow through. It gapped up on Thursday. Nice area to sell into strength. Watching for all of these semiconductors to follow through. Hopefully AMD, LRCX, NVIDIA, and a few others continue higher, along with ABGO. And Monolithic Power Systems, another semiconductor related name. 1-800-Flowers, following through, breaking a trend, connect these highs. Looking for a new uptrend. Volume coming in, MACD above its signal line, stochastics rising. Palo Alto Networks, network security, all of these took off last week. PayPal, Visa, MasterCard, Square, keeping an eye on all of these, looking very bullish. Pool from previous watch lists, breaking higher. Back above the 9, 21, and 50 day moving averages, RSI suggests that we could retest the highs. Regeneron finally getting some mojo along the 50 day, breaking higher on Thursday, follow through Friday, looking for a push higher. RSI suggests it's possible for a retest of 52-week highs. RBA setting up again for a short-term swing, 3 to 4, maybe 5 days. If this turns higher like it did previously, each time stochastics gets oversold, we're watching for a turn. RSI is turning as well. ServiceNow finally breaking out. Looking for a follow through. RSI suggests we could see that on above average volume. MACD's turning. Taiwan Semiconductor, along with the rest that we just mentioned, we could see a bounce off of the 9 EMA. Look for a follow through this week. Better setup on the pullback. Teradyne showing relative strength, following through. Trade Desk Trending, continuation, a little bit overbought. Watching MACD and the divergence on this one. Tractor Supply, a lockdown stock that should get back up to a triple top condition. 52-week highs. Volume and RSI suggest institutions are picking up shares that we could see more upside. I prefer a little flag for an entry. Trex, another building supply company that manufactures wood alternative decking, railings, handrails, and stairs and all sorts of things for outdoor projects. Looks pretty good. Volume increasing on Friday. Viva Systems being talked about by several analysts last week. Nice follow through off the lows here. Vertex and other pharmaceutical names all breaking higher last week. Watch for these to continue. VIP Shops Holdings, a nice little channel into the 21-day. Look for a breakout this week on above average volume. Stochastic set up and turning. You know I love this condition right here for an entry. And West Pharmaceuticals also moving higher on above average volume. RSI suggests more to come, possibly testing 52-week highs in the next several weeks, along with all the other stocks that are showing potential breakouts in the list below. Market Smith, Growth 250 in white with relative strength. Those stocks that funds are buying in green, and blue dot scan candidates in cyan that could break out this week as well. Make sure you check out this list in addition to what we saw in the Dow Industrials. Many of these looking for a breakout, like Caterpillar, MasterCard, J&J look really strong, Coca-Cola, Microsoft looking for a follow-through, Visa into year-end, and Walmart looking for a push-off the 50-day moving average. Okay, traders, this is going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com. I will send out a watch list later tonight around 11:30, lately around midnight on the East Coast, around 9 o'clock on the West Coast. Be sure to look for that in your inbox. Otherwise, get out there, enjoy the rest of your day. Holiday shortened week. Merry Christmas if you're taking off this week. We'll talk to you guys soon. Take care and have a great weekend and enjoy the rest of your day.